In 2026, millions of hardworking Americans will march into April and hand over a massive fraction of their wealth to the government. You will feel the sting of inflation eating your savings, while the tax code quietly takes what little is left. It is a financial slaughter, and you are expected to simply accept it as the normal cost of living in a civilized society. But what if I told you that at the exact same moment, the heirs of the Rockefeller empire, families sitting on billions of dollars in assets, will legally pay exactly zero, nothing, not a single cent in income tax? They are not cheating the system. They are playing a completely different game, using a 100-year-old blueprint designed to make their wealth entirely invisible to the government. A strategy so powerful, it turns the very concept of money upside down. Today, we are pulling back the curtain on the greatest wealth extraction of our time and showing you the exact three-step matrix the elite use to survive and thrive, while the middle class bleeds.
Educational and historical content only, not financial advice.
From the moment you were old enough to understand money, you were sold a very specific lie. Go to school, work hard, climb the corporate ladder, and earn a high income. You were told that a massive salary is the ultimate finish line. But in the hidden world of the ultra-wealthy, income is not a trophy. Income is a curse. It is a financial trap designed to keep the working class spinning on a hamster wheel while funding the government. Think about it. If you manage to earn $1 million through sheer hard work, the tax system will brutally punish you, stripping away 30, 40, or even 50% of your life energy before it ever hits your bank account. The system is rigged to penalize those who trade their time for a paycheck. But the architects of the global economy, families like the Rockefellers, realized something profound over a century ago. They realized that if you want to keep your wealth, you must eliminate your income entirely. In 2026, the elite do not earn money. They do not get a paycheck. They operate in a parallel universe where the rules of mathematics are inverted. To them, holding cash is a guaranteed loss due to inflation, and earning a salary is financial suicide. Instead, they have replaced income with something the middle class is terrified of: debt. You see, the Internal Revenue Service taxes money you earn, but they cannot tax money you borrow. This single deliberate loophole is the foundation of an infinite money glitch, a three-phase system used by billionaires to live like kings, multiply their net worth, and pass it all down to the next generation without paying a single dime to the government. It is a framework whispered about in the private offices of Wall Street, known simply as buy, borrow, die. And once you see how this matrix operates, your understanding of money will never be the same. To understand how this matrix operates today, we have to go back to the architect of modern wealth, John D. Rockefeller. At the peak of his power, Rockefeller controlled roughly 2% of the entire United States economy. He amassed a fortune that, adjusted for inflation, makes modern billionaires look like middle-class employees. But Rockefeller understood a fundamental truth about money that most people completely ignore. If your name is attached to a massive pile of wealth, you become a target for lawsuits, a target for creditors, and most importantly, a target for the government. So he pioneered a philosophy that remains the golden rule for old money families even in 2026. Own nothing. Control everything. You see, the average person wants their name on the deed to their house, the title to their car, and the top of their bank statements. They crave the illusion of ownership. But ownership is a liability. The elite do not own their mansions, their yachts, or their stock portfolios. Instead, they transfer their wealth into invisible legal fortresses known as trusts and holding companies. When the government comes knocking to collect taxes, or when an economic crisis wipes out the middle class, the ultra-wealthy simply open their hands and say, "I have nothing." On paper, they are virtually penniless, but in reality, they control the entities that hold the assets. This invisible shield allows them to completely detach their personal identity from their financial empire. And this is the critical first step. Before you can execute the buy, borrow, die strategy, you have to remove yourself from the equation. Because once your wealth is protected inside these legal vaults, you are ready to begin phase one of the matrix, the The buy phase. Once the invisible shield is in place, the elite execute step one of the matrix, buy. But their definition of buying is entirely different from yours. When the middle class gets a surge of cash, they buy liabilities, a new car, a bigger television, luxury brands, things that lose value the second they are purchased. The wealthy do not buy things. They buy cash-flowing assets. And right now, in the second quarter of 2026, while the masses are paralyzed by fear, terrified of inflation and market crashes, the top 1% are quietly going on a shopping spree. They are accumulating dividend-paying stocks, prime real estate, and businesses that produce consistent revenue regardless of what the broader economy is doing. They know that in times of economic panic, the best assets in the world go on sale. But here is the secret that makes this entire step work. They never intend to sell these assets. Ever. Selling an asset triggers a capital gains tax. If you buy a property for $1 million and sell it for $5 million, the government immediately steps in to take a massive cut of your profit. To the Rockefeller mindset, selling a performing asset is the ultimate financial sin. You are killing the golden goose just to get taxed on the meat. So, they simply hold. They let the assets appreciate in value year after year, decade after decade. The portfolio grows to $10 million, $50 million, $100 million. Because they never sell, they never realize the gain. And if there is no realized gain, the tax bill is exactly zero. But this raises the ultimate question. If all their wealth is locked up in assets, they absolutely refuse to sell, and they purposely have no traditional income. How do they afford to live like billionaires? How do they actually buy the private jets and the mega mansions if they are cash poor on paper? The answer to that question is step 2 of the matrix, and it is arguably the most closely guarded secret of the modern banking system. Step 2 is where the magic happens: borrow. If you never sell your assets, how do you buy groceries or private jets? You go to the bank, but you do not ask for a personal loan or put it on a credit card. You use your massive portfolio of stocks and real estate as collateral, and you take out a line of credit against your own wealth. Here is the brilliant part. The Internal Revenue Service does not consider borrowed money to be income. When the bank hands you $10 million in cash backed by your assets, you pay zero tax on that money. You can use that $10 million to buy a mansion, a yacht, or fund a lavish lifestyle in 2026. Completely tax-free. But wait, you might be thinking, do you not have to pay interest on that loan? Yes, but the interest rate for the ultra-wealthy is incredibly low, often just 2 or 3%. Meanwhile, the assets they used as collateral are sitting in the market, continuing to grow at 7, 8, or 10% a year. The growth of their portfolio easily outpaces the interest of the loan, and then some. It is a self-sustaining machine. And in a high inflation environment like the one we are facing right now, borrowing money is actually a superpower, because inflation destroys the value of debt. The $10 million you borrowed today will be worth significantly less in 5 or 10 years. You are paying back the bank with cheaper dollars, while your hard assets are inflating in value. You are literally getting richer by being in massive debt. This is why the working class is crushed by credit card balances, while the elite use strategic debt as an invisible money-printing machine. They have completely separated their cash flow from their tax liability. But eventually, every loan has to be paid back, right? Or does it? This brings us to the final and most shocking phase of the matrix. But eventually, every human being runs out of time. And this is where the middle class assumes the game must finally end. You might be thinking, sure, they lived like kings on borrowed money. But when they die, that massive mountain of debt will crush their estate, and the government will finally take its cut. This is the greatest misconception of all, because the elite have a final card to play. The third and final step of the matrix, die. When a billionaire passes away, the Internal Revenue Service has a very specific rule that feels almost like a financial cheat code. It is called the step-up in basis. To understand how insanely powerful this is, imagine our billionaire bought an asset for $10 million decades ago. On the day they die, that asset has grown and is now worth $100 million. If they had sold it while they were alive, They would owe a fortune in capital gains tax on $90 million of pure profit. But because they died holding the asset, the government steps in and essentially erases history. The tax code magically resets the original purchase price to the current market value of $100 million. That $90 million of taxable gain completely disappears. It is wiped out legally and permanently. So what happens next? The heirs inherit the $100 million in assets, entirely tax-free. But what about the massive loan the billionaire took from the bank to fund their lavish lifestyle? The heirs simply sell a small fraction of the newly tax-free assets to pay off the bank loan. Because the assets receive the step-up in basis, selling that small fraction triggers exactly zero capital gains tax. The debt is settled, the bank is happy, the government gets absolutely nothing. And the next generation inherits a pristine, massive fortune. They are handed the keys to the empire, and the very next day, they begin the exact same cycle all over again. Buy, borrow, die. It is a perpetual motion machine of wealth preservation that crosses generations, leaving the middle class to shoulder the tax burden of the entire nation. Now, you are probably thinking, this is a fascinating story about billionaires. But I am not a Rockefeller. I do not have a $100 million portfolio to borrow against. How does this help me survive 2026? The truth is, the matrix is not exclusive to the elite. The blueprint scales down. You can execute a mini version of buy, borrow, die right now, if you understand the mechanisms. Let us break down how an everyday investor can escape the trap. Step 1 is still buy. But instead of buying skyscrapers, you buy fractional shares of index funds, or dividend-paying stocks, or a modest piece of real estate. You hold these assets in a standard brokerage account or build equity in your home. Now, step 2. Instead of selling your stocks to pay for an emergency or a major purchase, triggering a massive tax event, you use a margin loan. Most major brokerages will allow you to borrow against the value of your portfolio at relatively low interest rates. Or, if you own a home, you use a home equity line of credit. You are borrowing your own wealth, tax-free. Another powerful tool is a high cash value whole life insurance policy. The wealthy have used these for generations as private banks, borrowing against the death benefit while the cash value continues to compound. But, and this is the most critical warning of 2026, playing with the bank's money requires absolute discipline. If you borrow against your stock portfolio and the market crashes like it did in 1929 or 2008, the bank will issue a margin call. They will force you to sell your assets at the exact worst time, wiping you out completely. The Rockefellers survive market crashes because they never over-leverage. They borrow a tiny fraction of their total net worth. If you try to borrow 80% of your portfolio, you are not playing the elite game. You are gambling. The key is to borrow safely. Let inflation eat the debt, and let the assets grow untouched. The rules of the global economy were not created to punish you. They were created by the elite for the elite, and they are hidden in plain sight. In 2026, as inflation continues to surge and the tax burden grows heavier, you face a critical choice. You can continue to play the game exactly how the system designed it for you, trading your time for a heavily taxed income and watching your purchasing power slowly fade away. Or you can choose to wake up. You can choose to understand the matrix of debt, assets, and taxes and start building your own invisible shield. The wealth transfer of this decade is already happening, and the only question is which side of the equation you will be on. If you are ready to stop thinking like a consumer and start thinking like a Rockefeller, hit the subscribe button to join Mindset for Wealth. We are dedicated to uncovering the financial secrets of the top 1% and bringing you the history, the strategy, and the mindset you need to protect your future. The elite have their blueprint. Now, you have yours. Subscribe now and never be a victim of the system again.